Hello, everyone, and welcome back to the HUBB Live Trading Room. It's great to be back with you all during this trading week and during trading hours. Very exciting topics to discuss for this session, so let's go ahead and get right into it. First and foremost, we do need to cover our disclosure disclaimer agreement. It's available on our websites at all times, so please feel free to read that in detail at your leisure. But without further ado, the man of the hour, Mr. Rob Roy.
Hey, Zach. Hey, everyone. Welcome to HUBB Trader Live. As you can see, still got all the EWO gear on. Can't get those folks at HUBB to send me a shirt or something. Goodness, like to have a little bit of their wares in order to show, because certainly impressed with the software that they produce, that's for sure, which is why we use it at EWO. But let's take a look at the AI stuff for this week. That's the purpose of this show, is to show how you can utilize this really cool piece of software in finding trades. The issue that we're going to have today is when we go and switch over to the AI signals, there aren't any trades for today. So this would be Friday's close. Nothing on the bearish side and nothing on the bullish side. And then we switch over to sideways and nothing there either. So we don't have any AI signals for today, which I think really does play into what's going on with the market here, and what I talked about during the EWO Trader Live show on this potential ending diagonal pattern that's going on in the market. So we're going to break out at some point on the S&P. We'll just have to see when that occurs. But what I wanted to show you was a couple things here with AI, and so I'm going to go back to Thursday's date. We did have this alert that went out on SBGI, Sinclair. And you can see that it moved up, or you should have been able to notice, because we closed on the high that occurred on Friday. It made a nice move after we sent out the alert. Should be profitable for everyone already that's been following it. Did have a little bit of move to the upside here, kind of consolidating a bit, trading at this moment right about where we closed on Friday. A little bit overbought, so a little bit of sideways movement here is normal before they move back to the upside. So far, so good on that one. Obviously, it makes sense with what's going on with the price of oil, etc. We could see some follow through on that pretty darn quickly. But I also want to go through and show you the bearish signal, because I feel like we can do some talking about the AI. You've heard the conversation regarding fading low AI signals and going the opposite direction. Well, when we look at IMKTA, the score is 38. Now, what the AI scientists have told us is to fade symbols that have a signal below 25. And I wanted to show you why I think that's important. I can add a little color to this if you will indulge me for a second. So even though that score was low, it's not low enough. It's not below 25. So since it was a bearish score, if it was below 25, then we'd look to say, okay, let's look to see if we could go to the upside. But it's too high for that. And then on top of it, if you look at what the name of the company is, it's Ingalls Markets. And up in the mountains in North Carolina, I can tell you Ingalls is the grocery store of choice up in this area. Down in Florida, it's Publix supermarkets. They are based in Jacksonville. They pretty much dominate the state of Florida. Same thing for Ingalls Markets up here. And then the other side of the coin is the primary factory for Ingalls, their main point, a la the point for Publix that's in Jacksonville. The main warehouse is in Asheville, and it's underwater. So they can't get any of their product out. None of their credit card machines are working. It's cash only. They can only sell what they have, and they think it's going to be weeks before it's rectified. Obviously, that's going to be a hit to the bottom line on the next quarterly earnings. No doubt about that. which is why, as you look at this signal here, you can see that we're trading near the low of the day today. So while a low score would have been tempting to fade, it's not low enough to fade. And I just think that these little things involved in the AI continue to amaze me. Clearly, they had no idea what was going to go on with the storm. And then we had this downward move following the storm because of that. And what you might have considered as an oversold condition, not enough to generate a bounce back up towards the fail zone. And it certainly does seem like, even though with a score rounded up to 39%, this one is likely to come down and hit its target price. So since we've talked about fading low signals, I just wanted to talk about, let's be disciplined and follow what the data scientists are telling us and not fade anything that is 25 or above. It's got to be below 25 before you consider doing that. So it just kind of is quite interesting to me when you look at this and dealing with on a personal basis to see that play out, fundamentally backing what's showing in the AI is what I'm getting at. So what I thought I would do, since we really don't have too much to talk about from an AI standpoint today, other than that, is show a couple of things with these indicators and how to utilize them. We're used to, I would hope by now, seeing up here the little plots arrow, and where you can use the settings little gear wheel here to change your settings. Let's go down here, and as you can see, this symbol here is called the fib projection. Well, when I click on that and utilize it to draw a line up to the end of an impulse, and I just picking this, if you were drawing a projection on this, you can see that it would go through and make the drawing for you. But when we come up here to plots, it doesn't show fib projection on here. So in this one, you would come over and right click on it and go to the edit settings there. And you can see it brings up fib projection. And you can change the coloring of the lines. You can change the fill color where it gives you that shadowing, which I think is really cool. If you just click on that, then it gives you the color wheel. Pick whatever color you like. I just stay with this light blue is kind of the default. And then the fib levels that you want to show on there for the projection, you can see I've got the standard ones that I like, 38.2, then 50, 61.8. You can make it solid line, dotted line. You can change the thickness of the lines, and then you check the box on the appropriate levels to show within here. So that works on the fib projection tool. It also works the same way on the fib retracement tool. So if I click on that, I've shown this one to you, which I just think is really cool. You just draw the lines up there. Same thing. It has the blue shadowing. That's the default. That's the way it came with it. But then you come up here, click right on the line, and you can edit the settings the same way. So if you want to change the coloring of the lines that show the different levels, you can change that. If you want to change the shading, you can do that. And then coming over here on the fib levels on what you want for your retracement areas. Again, changing the thickness of the line over here, changing from line to dotted charts or dash charts if you would prefer to have those, and make sure you check the box on whatever levels that you're putting in for those. So I just thought I would show just that little tip there with the fact that it doesn't give you the indication up here in plots like it does for the moving averages, etc. So just a slight little tip there that I thought I would put into the mix. Also wanted to highlight, as we're going to come back over here to the regular charts and look at the S&P, I've shown this before, haven't really gone into detail about it in the past, but there's a difference between putting volume here as its own indicator. It's not a big difference, or you could just use VU as volume underlay, and it adds it in on the main chart there. So it doesn't have a separate chart, it just has the main one. And I just think it's a little bit cleaner. I'm kind of picky about this. I like the charts really clean. That's why I have all the corrective patterns, the ABCs turned off. I utilize those tools, the fib retracement, fib extensions, draw the triangles myself, etc. Zigzags, all that kind of stuff with the ZigZag tool. Same thing there. So I just like to keep the charts as clean as possible. So there's very little on there other than a few of the lines that I've drawn. I drew this line down here at the wave 4 during our EWO Trader Live. Remember, it remembers it. And that's just in case we do get a downside breakout from this ending triangle. So far, still holding above the 10-day moving average. But if we just do a little thing along these lines each and every time of one little tip, and get used to utilizing it, we will get to the point where I think everybody is pretty clear on it. So we can click on plots here down with the CCI, and I do highly recommend having the periods 21. You can change the coloring of the line from the royal blue if you want, and whether or not it's a solid line, again, dotted line, whatever your preference is. I just think that I like the royal blue with the shading being gray as a good contrast to the red that I use a lot for drawing the lines, etc. So with that, Zach, really don't have a whole lot more to talk about. It's just one of those days when there's not much from the AI realm of things. Certainly not going to be any AI alerts going out today. We did just send out an alert to close out Nvidia. I thought I would just go ahead and show that breaking from this triangle pattern. Created a larger triangle on Nvidia, breaking out, and some may wonder, why would you be sending out an alert to close it out on the first day of the breakout? Good question, because it certainly could break out and run a whole lot more than this, but here's the reason. Remember that there are 3 different ways of breaking out. This could break out and take off and run. It could break out, come back and test the breakout before turning and moving back. If it does that, then we will watch for the test and then re-enter. Or it could also be a false breakout where it looks like it's breaking to the upside and then turns and comes back down. We have to respect that as well. And that's where my concern comes in on what's going on with bonds. So you have this big spike up in bonds yields on the 10-year pricing moving down, and therefore yields up on the 20-year. That is not conducive to a continued move up in Nvidia or anything on the Qs. So we get a breakout day, and we have a chance where we had a 40% drawdown plus, and now we're profitable. We're going to take that opportunity. So just thought I'd give you a little flavoring there. I know it's not in the AI impulse portfolio, but you should be getting access to the volatility search if you're in level 3. So just kind of slightly different on what occurred with Nvidia. Too expensive to do the strangle, so we traded an upside breakout. We got it, and after forming a slightly larger triangle, we got the breakout day we were looking for. So again, just adding a color. Zach, we've got about 10 minutes left if there's questions. If not, then we can just say, hey, let's get back to the trading day. I know you got your hands full, both from a work standpoint. You've got more events to do today and preparations to make for the storm. So If there are any questions, I'll take them. If not, let's get back to trading.
Absolutely. Sounds like a great plan. We'll start out real quick, Rob, with can you go over to that cursor toolbar for me and go down to the floating info? This is a question I'm answering from the chat. So as you can see, once Rob clicks that floating info and then hover over any of the bars there, you have all the price data for each of those bars. So for that to be displayed, that's all you have to do for each time. Next up, we'll go to a question from David.
That's a
Hi,
great
Rob.
point. Sorry, Zach. I wanted to further that. It's a great point because that was one of the cool things with the legacy software where you could use the crosshair and go across it and it would give you the pricing. And I know people were like, well, where is that? And you just pointed it out. So that I think that's you went through it really quickly, but I think that is a really important point to make to where you can see exactly where we are. And that does save you from coming over here, hitting the crosshair, and then coming over and saying, okay, well, let me put it right here on the top. Okay, that's at 129. Instead of doing all that, boom, just you hit that and put your cursor there, and it gives you the whole box. Even gives you a volume bar, which, the legacy software didn't have that. So I know there's some of you out there that are still like me that are old dogs and used to using the legacy software. But gosh, I'm telling you, the more you use this software, the more you're going to love it and find all these little nuances, little cool things that it does. And, it's just going to continue to get better and better and better. Okay, I'll stop talking. Go back to the Q&A.
No worries. Yeah, I echo those sentiments. We have a question here from David. Hi, Rob. Can you please discuss and/or show this soon-to-be options chain, how it will be used and to save time and implement trades?
Yeah, absolutely. So here's Nvidia. You just come down here in the bottom. It's right down here where yours doesn't say it yet, but it will soon. You just click where it says options, and it pops it all up for you and brings up the option chain. And then you have all kinds of different things that you can do here. You can see its call. You can come over here and switch it to just straight calls and then get rid of the puts or bring them both back. Or you can just click on P and it brings you to just the puts. And then the strategy of a long call. The risk curves are almost done. They've been showing us that. They're really proud of the risk graphs that are coming up. I'm not going to go there now because who knows whether or not it's going to come up appropriately, but it's very close to being done. And then the strategies, this is how you're going to utilize it. So if we had both and we put on strangle, then it brings it over here. And notice how it defaults to buy one call and then buy one put. And it comes over here where the strategy is buy to open, and it's giving you can change it the months, etc. Down here, change the number of options from quantity of one, which expiry you want. It's good October, or you can go to different months. This is obviously showing you the weeklies, the October 11th weeklies, with 4 days left. Move the strikes, make it a little bit wider. I like to come up here where the headlines are. I always want to see open interest, as you know. Don't really care about volume so much. I don't really care how many contracts were traded that day. That's what volume is. Open interest is total open interest. So I click on that one and change it. And then there you have all the Greeks. You can put any of the Greeks that you want on there. And the main one that I'm looking for is Delta. I already know how Gamma works with Delta, so I don't really need to have Gamma on there. And you can see how the pricing is changing. It's live as it's going through and moving the prices as they adjust. So these are going to be live option quotes that you're getting here to create these strategies. So that's important to note. So you can see where the deltas are, and you come here to the 130 is a 49 delta, and the open interest. And you can come over here and change it on the put side as well. So you got the deltas on both sides. A reminder that negative delta is how it's displayed on the put side, positive delta on the call side. because calls make money as stocks go up, puts make money as stocks go down. You know all that. It just whatever strategy you want to go to a straddle instead. You just click there, and now it gives you the at the money strike. But you can move those the strikes around on the strangle. You can spread the width out a little bit, and eventually you're going to be able to connect this to your trading account and just click boom trade, and goes right to it. It's going to pipeline, and you can place the order right from this screen without ever having to leave. It's going to be really cool. If you wanted to sell something, if you wanted to create a strategy where you are buying something and selling something, on the call side, this is a call vertical. See, now it's giving you the green for buying one and the red for selling one. So buying is green, selling is red. You could create a 130. You wouldn't create a 130, 131, obviously. So you would want to make the width a little bit more. So I just widen it out, and you come up here and give more strikes. And then you can see how I widen the spread by moving the width. Just all kinds of cool things. It's a little bit early to go through it. Obviously, once all the options data is complete, live, and able to be used, we will be spending a whole lot more time going through these kind of aspects and showing you how to utilize it in creating your strategies. But that's just a couple things to note. Main one here is that you can change this. It's not, you don't have to stay with the volume on the options. And you can see where it's going to have IV. Yeah, I mean, it's pretty amazing. It's such a clean platform for looking at options, easy to read, and then setting up your strategy over here. So you change your mind, you're like, take that off. It's just so many things that you'll be able to do. But thanks for asking about that. I know everybody's excited about it. We are too. They're really close to being done with the option stuff and the risk curves, etc.
Exciting indeed. It looks so clean and user friendly, and very excited for when that is in full operation and functionality. Pat here says, Rob, how do you use fib projection versus fib retracement, or do you use one or the other versus themselves?
Well, I tend not to use the fib projection as much after they created the ZigZag tool. If you remember, Pat, if you're the Pat I'm thinking of and been around a while, I used to use this fib projection for calculating zigzags. And so it's kind of the old school way there, where you would click here and then come up and just look at where the projection levels were. You'd have to figure out where the retracement was, etc. So honestly, I don't really use the fib projection so much anymore, because I use the ZigZag tool, because I'm not really concerned about any sort of fib projections other than zigzags. So clicking in the shadowed area for the B wave, clicking in the shadowed area for the C wave extension, and I just stay with that on the projections. So it's on here more to show people the projections, but I really just don't use it anymore. But I do use the fib retracements at times when you're looking for potential zigzags. So let's say we don't have any of this other stuff, and we were just wanting to see, where did that retracement go? Could that be a zigzag setting up? And you can see it came right down here and had 5 days right at the 61.8% retracement level. So if we're looking back and we're saying, hey, this is right here on the 9th of September, and we saw the retracement, could this be setting up for potential zigzag? Yes. Or you don't even have to do that. If you wanted, you could then just use the zigzag tool. Let me take this one off. You could use the zigzag tool for your correction level as well. And then it gives you where the potential corrective move is. So, yeah, it's I've just moved towards utilizing the heck out of that ZigZag tool, but that's how you would use the projection if you're looking for where it could move.
Yep, zigzags and wave threes. That's one of the Robisms, as we know.
It is.
Pat confirmed, yes, I am. I also use the fib retracement, so just was wondering. So thanks for that confirmation there. Maria says, can you show how you use the projection tool?
I just did.
Yeah,
So.
I was going to say, I think
Yeah,
that was a two-part question there that was answered.
Yeah.
We will go to Parker. Can you go over what happened with Jay and how that works with option pricing?
Well, what happened with Jay, you must not have been available on Thursday night during the insiders meeting. Zach, we're getting some feedback. I don't know if you can mute on your side or if
Yeah, I just did.
Okay. What happened is they spun off a company, AMTM. Every time a merger acquisition happens, the board gets together and decides, and the company's together, and they decide what they're going to do with the options. There's no rhyme or reason. It doesn't happen the same way every time. What they ended up doing with the way they calculated the options, they didn't change the strikes, but what they did was they calculated in 80% of Jacobs and 20% of AMTM. And AMTM didn't have options, so they just kind of had to figure out, okay, what would we use for those options in calculating the price? And then because it was a new formula, once the options first came out, there was zero open interest. So it's like a brand new formula for the split, the settlement, they call it, on the options, because they have to have settlement for any sort of assignment issues. If you go through and exercise your options, they had to have that calculated out. So when it first started, it looked rough because there was zero open interest and the spreads were quite wide. But the spreads were wide because there was no open interest. And as you probably saw, we were able to split the spread, even though it was $1 by $5 or something crazy. We were able to split the spread at a nice gain to get out, and it got filled. And that's just simply because it took time to go through and get people trading on the new options again to start to get some open interest to show up. So apparently the market kind of liked this spinoff because the stock turned and ran right back up. It gave us a real nice gain in a short period of time. Probably a quicker gain than we would have gotten without the spinoff, even though the day of the spinoff, we're like, gosh, that was not fortunate the way they did this. But it turned out to work out really well. And then if you didn't get out before Thursday, you easily should have gotten out at probably even a better price than what we got on Friday, as we went all the way up to the 10-day moving average. It's backing off a little bit today, but everybody should be out of this, especially the fact that we were fortunate enough to get this vertical move back to the upside. So it's always different. You never know exactly how they're going to do it. They do it they get together, the merger acquisition companies, and make those decisions and choices, and then we're just forced to live with it. I've seen where they just incorporated the whole thing in and it all stayed the same as it was, but this one they did an 80-20 split between Jacobs and AMTM as far as figuring out the options and the settlement. So that's what ended up happening. A very unusual scenario, but it's almost like unusual is the usual in the world of trading. So hopefully everyone enjoyed a nice gain there and is out, because hopefully nobody's waiting for this gap to get filled, because who knows when when that could happen. And then the AI targets obviously are based off of when the original signal came out, and they're not adjusted for this odd kind of settlement split that they came up with between the two companies.
Very well. Thanks for that insight and explanation there, Rob. We'll wrap up this session as we are 2 minutes after time with a question from John. How long can an AI alert be considered still valid?
It's to me, it's still valid as long as we have not, and that's a question, good question that came up in Evo Trader Live earlier today as well. And going through and utilizing, I'll use the same symbol that we talked about earlier, NTRS, which the position is in a drawdown, but not that significant. And it came down, just touched the line and broke up. We exited QGEN that broke the fail zone. Only one of a couple that have done that in the year and a half we've been sending these signals out, which is a pretty amazing, the accuracy that the AI has had. But to answer your question, there is no time frame for me on these based on what I've seen. We try to go a little further out in time. That's one thing that I have learned over the age of these AI signals. Normally, the AI has a medium range expectation. We've had a lot of them that move rather quickly. As you can go back and look through, there's so many that have been 5 days or less, and we love those. But there's also been a lot of them that took their time. So not really a time exit involved in the AI signals. It's as long as it stays in between the fail zone and the target price. If time goes by, I'm trying to hedge that off by going further out in time than maybe I would have in the past before I started using the AI signals to give it that extra time. But if we start to run out of time in the option, if we get within that 45 days and we're not making a move yet, but yet we're still within the accepted range from the AI, there's the possibility of rolling out further in time to give it a chance to go up and hit its target. So we're not going to give up on the signal unless it breaks the fail zone, is the point. Fortunately, we haven't had to really do the rollout in time frame. It's the ones that have taken time have taken some time, but there has been one or two of those scenarios, but not too many of them. So once again, one of my patented long-winded answers is there is no time exit. It's following the pattern, the layout of the AI, and giving it an opportunity to go do what it's supposed to do. As you can note on what's happened with NTRS, I think this one's a good example. Remember, we're trading a zigzag within a wave 3. Well, this pullback that came back down created the wave 4. But we didn't violate the fail zone. So we bounced right off that. Moving up, we're kind of just going sideways today, but we are above the 10-day moving average. So there's nothing from a technical standpoint here to indicate taking this position off. I'm more concerned with what the bond market is saying when we're moving into a period of easing from Federal Reserve, monetary easing. That should be an upward catalyst for anything financial. But the fact that interest rates are moving up, that's where my concern is. But we'll hang in there with this unless it comes back to hit the fail zone. And then that's going to be the exit. And that's the modus operandi for these positions and how we're going to trade them. And so far, that's worked out extremely well. Pretty comfortable with following that risk management mode on these. So with that, thanks for spending some of your trading day with us. I'm going to say the same thing for those of you watching. Hopefully everybody that is here and has the HUBB software, you founders, members, please join us tomorrow for Trade Finder. If you haven't signed up by chance, go to the website, sign up, because with the storm coming, likely going to be the last time of the week to talk to you live. I can post commentary, etc. Starlink, Elon will make sure you have internet, but don't know about power, etc. Anyway, geared up for being able to watch the market and post commentary. Probably not going to have the opportunity to do these live Q&As. Certainly not on Thursday night with what's expected to come. So please join us tomorrow for an update. I'm going to try to do an extended live Q&A on Trade Finder tomorrow. So thanks, everybody. Have a great rest of your afternoon. Hopefully we'll see you tomorrow. Look forward to talking again soon. Take care.